Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Welcome to Connecting the Dots from Snarful Solutions Group here in Sacramento. It's Wednesday, December 17th, 2025.
Happy Wednesday, and it's a bit of a dreary one here in Sacramento. We've got showers, some patchy fog, but looks like it'll clear up to partly sunny with a high of 61.
Yeah, pretty standard for us. But our thoughts are with folks elsewhere. A really powerful storm hitting from the northern Rockies to the plains. We're seeing dangerous winds, 50 to 70 miles per hour.
And even some critical fire weather in eastern Colorado, so a lot going on nationally.
A lot indeed. Now, quick check on the markets from yesterday's close.
Sure, things were mostly quiet on the surface. The Dow slipped about 0.5%, closing at 48,114. Still holding a small gain for the week, though.
Right.
The S&P 500 was basically flat, no movement there. And Bitcoin is just holding steady around 87,786, down just a tiny fraction.
So the big indices are calm, but that really hides the massive deals happening underneath. That's what we're getting into today in our Morning Star Report. We're talking huge infrastructure bets and some serious Hollywood drama.
Absolutely.
But first, we want to give a shout out to our sponsor, Old Glory. Look, if you need a great holiday gift, especially for a techie friend or, anyone who loves music and sports merch, they're fantastic.
Really iconic stuff.
It is. And as a listener, you get 15% off your entire purchase. Just use the promo code SNARFUL, that's SNARFUL at checkout. Go to oldglory.com.
Great way to get that shopping done. Okay, so let's start with this first story. I call it the AI infrastructure gold rush. And it's all about a company called Hut 8.
Right, Hut 8, the Bitcoin mining company, ticker HESUTT. And their stock just exploded. It soared over 20%.
Yeah, and it was on the news of this just colossal deal, a 15-year lease with an AI infrastructure firm, Fluidstack.
And when you say colossal, the numbers are, well, they're kind of staggering.
They really are. The deal is valued at $7 billion. That's for 245 megawatts of IT capacity at their campus down in Louisiana.
And that's just the start, right? There's a potential expansion.
Oh, yeah. It could expand by another 1,000 megawatts if that happens. And with renewals, the total value could jump to $17.7 billion.
Wow. Okay, so this is why we've seen crypto miners trying to pivot. They have the infrastructure, but this is a pivot on a whole other level.
It's a complete transformation, and that's why investors loved it. Hut 8 is expecting to generate, get this, $6.9 billion in cumulative net operating income.
$6.9 billion.
Yeah, that works out to a very steady $454 million a year. So they go from being this, speculative, volatile crypto company to basically being a utility, a high-demand landlord for AI processing.
But there's a missing piece here, the dot we have to connect that makes this whole thing solid.
The guarantee.
The guarantee. It's from Google. Alphabet subsidiary is providing a financial backstop for the entire 15-year lease.
And that is the absolute linchpin. It takes almost all the risk off the table for Hut 8. I mean, when Google steps in and says, we'll back these multi-billion-dollar payments, it just signals where the real giants are placing their bets.
It says the demand for AI compute power is real, and it's here to stay for the long haul.
Exactly. And you can see the real-world impact of this. In Louisiana, this could be one of the state's largest private capital projects ever.
The sources mentioned 1,000 jobs during construction, and then at least 75 permanent operational jobs. That's huge for West Feliciana Parish.
It really is. It feels like the new oil isn't crypto anymore, it's AI processing. And the money is just flooding toward anyone who can provide reliable power for it.
A really powerful shift. Okay, so from physical infrastructure, let's pivot to the dream factories, Hollywood, where the battle for control is, well, maybe even more dramatic.
Oh, definitely more dramatic. We're talking about the cage match between Warner Bros., Discovery, WBD, and Paramount Skydance, or PSKY.
And the big news is that the WBD board has unanimously and very publicly rejected Paramount's unsolicited bid.
Yeah, a $30 per share, all-cash hostile bid. They said no.
And here's the fascinating part. They're sticking with a lower offer from Netflix. That one's valued at $27.75 per share, and it's a mix of cash and stock. So they're turning down more cash.
And to understand that, you really have to dig into the structure of the two deals. They're fundamentally different.
Okay, break that down.
So the Paramount Skydance bid, the PSKY one, wants everything. The whole empire. The studio, HBO Max, plus all the cable networks like CNN and TNT.
They want to build an old-school integrated media giant.
Precisely. The Netflix bid, on the other hand, is more like surgery. It only wants the high-growth parts, the studio, HBO, and HBO Max.
And what happens to the cable networks?
They'd be spun off into a whole new company, what they're calling Discovery Global. So it lets WBD clean up its structure and focus on streaming.
Right, which explains why the WBD board used such strong language.
Yeah.
They called the Paramount offer illusory. You don't hear that word in a corporate filing every day.
No, you don't. And they backed it up with 3 huge red flags. The first one was financing certainty.
Or the lack thereof.
Exactly. PSKY's $40 billion equity commitment, it relies on, and this is a quote, an unknown and opaque revocable trust from the Ellison family.
So the Ellison family of Oracle fame.
Yeah.
But opaque and revocable are 2 very scary words when you're talking about $40 billion.
They are. Revocable means the funding could just disappear halfway through the regulatory process. It's not a secured commitment from a bank. It's conditional. That's a massive risk for WBD.
Okay, so that's red flag number 1. What's number 2?
Credit risk. I mean, look, PSKY is a much smaller company, only a $15 billion market cap. Its credit rating is basically junk status. Their debt is already at 6.8 times their earnings. That's a really high leverage ratio. The combined company would be extremely vulnerable to any kind of economic downturn.
Which leads right into the third red flag,
Yeah.
the hidden costs if this all falls apart.
Yes, this is the kicker. If the Paramount deal fails for any reason, WBD shareholders are left holding the bag for $4.3 billion.
$4.3 billion. How does that break down?
Okay, so there's a $2.8 billion reverse breakup fee they would owe to Netflix for walking away from their deal.
Right. That's like a penalty payment.
It is. Plus another $1.5 billion in debt financing costs they'd have racked up. And Paramount never offered to cover any of that. For WBD shareholders, that's a loss of $1.66 per share.
So when you frame it like that, turning down the higher cash offer makes perfect sense.
Yeah.
You have one deal that's a risky leveraged buyout that could implode and cost you billions.
Right.
And the other is from a stable partner like Netflix with a $400 billion market cap and an investment-grade balance sheet.
And Netflix is putting its money where its mouth is. They're committing to a record-setting $5.8 billion regulatory termination fee. They're showing real confidence they can get this done.
Plus, they've made promises about keeping WBD films in theaters, respecting that legacy, which is a smart PR move.
It is. Which brings us to the final piece of this puzzle, the politics and the regulators.
This is where it gets really messy. Paramount tried to argue they'd have an easier path to approval.
Yeah, their argument was, hey, we're not a streaming giant like Netflix, so it's less of an antitrust issue. But WBD's board, and most experts, frankly, said there's no material difference in the regulatory risk.
Both deals face a long, long fight, probably into 2026.
At least. And you have international bodies like the European Commission who are going to look very, very closely at a Netflix deal, arguing it would eliminate a major competitor in HBO Max.
And the political side for Paramount has just, well, it's kind of backfired spectacularly, hasn't it?
It really has. The Ellisons have touted their political connections, but then President Trump recently slammed the owners of CBS, which is part of Paramount's holdings.
And right after that, Jared Kushner's firm, Affinity Partners, just pulled out of the bid entirely.
Yep. So that political capital seems to be vanishing pretty quickly.
But this is where the story pivots from just a boardroom fight to a national security issue.
Yeah, the CFI-US review.
Yeah, explain that. Because this is a huge dot to connect. PSKY's funding includes $24 billion from 3 different Middle Eastern sovereign wealth funds.
And that massive foreign investment immediately got the attention of lawmakers who urged WBD to seek a review from CFI-US, the Committee on Foreign Investment in the United States.
So now we're talking about foreign influence over American media, over content.
Exactly. Now, the funds claim they agreed to give up any governance rights, but CFI-US looks deeper than that. They look at what they call practical influence, access to information, and leverage.
Right. So even without a board seat, if you have access to sensitive strategic information, that can be seen as a national security concern.
Absolutely. So the risk of the whole deal getting bogged down or even killed by a CFI-US investigation is very real. It just adds another massive layer of uncertainty.
So what this all boils down to for you is that WBD's rejection wasn't just about the price per share. It was a choice for certainty and stability over a higher, but much riskier cash offer.
A very messy, high-stakes drama.
Before we wrap up, a quick thank you to our other sponsor, Scony. They make premium golf shoes. If you're a golfer or no one, definitely check them out for quality and style. And you can use our promo code SNARFL for 15% off your entire purchase. Their website is scony.com.
Okay, so to bring it all together today, first we saw Hut 8 make that giant $7 billion leap from the speculative world of crypto into the much more reliable world of AI data centers, with Google's backing.
And then we unpacked the very dramatic, politically charged rejection of Paramount's bid by Warner Bros. Discovery. They chose the stable, structurally cleaner deal with Netflix, despite a lower price tag, because of all the financial and regulatory risk.
And the final thought here is that the conflict isn't just about who wins this one deal. It's really about the future of Hollywood. What do we want it to look like? Do you prefer a giant integrated company that owns everything from the studios to the cable networks? That's the Paramount vision.
Or do you prefer a more focused, streaming-first behemoth that spins off the old legacy assets to focus purely on digital, which is the Netflix vision? The shows and movies you get to watch in the future really depend on who wins this fight.
It's something to think about.
We're here to help at Snarful, so reach out on our website if you have any more questions.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.